Good morning, everyone, and welcome to this morning's London Forex webinar. I think I may have mentioned to you last week, we weren't sure whether we were going to be doing it today. Our daughter is waiting. We're just waiting for our daughter to have a baby, and we actually thought it would be sometime this week, but no, she's decided she wants to wait, make us wait a little longer. So here we are, and obviously it impacts next week, and if we have to cancel, we will give you plenty of notice, baby permitting. Anyway, thank you so much for coming along. And as usual, I know you can see the disclaimer that that is up on your screen. So please, please, please take a second to quickly read through it. I know you've seen them before on this webinar, and I'm sure other webinars that you may attend. Anything to do with trading and investing, it is a requirement that this is put up to remind you that trading can be a very risky business. So please, please don't ever think of using money that you cannot afford to lose. Right, we are just going straight down onto the charts, and in particular the pound Aussie, because this is a pair that I've actually been writing about quite a lot on my blog, because one of the what we've been talking about in these sessions is, as traders, when we come to our screens, one of the things we have to try and recognize quickly and really get sort of be brought up to speed on is what kind of trading conditions, what kind of market conditions are we going to be facing, as I said, when we start with the Forex market. It is a 24-hour market, but you're actually looking at three very, very distinct sessions where sentiment can, sometimes it sort of, will flow through from one to another. And by sentiment, I mean, is it going to be risk on or risk off? But sometimes it doesn't. Sometimes, because of local fundamental news, news that is going to be applied to a particular currency, that's going to be affect the performance of that currency, regardless of what may have been happening in the run-up to that piece of news. Or you can have a piece of fundamental news in that session that actually isn't just local, but then has possibly global implications. And with the pound Aussie, and particularly the Aussie part of this pair, this is what we had. We've been having in the run-up and also overnight. And the reason I've put up the calendar, the fundamental calendar from investing.com, because it's something I know most traders like to use the one at Forex Factory, which is fine. It's a great snapshot. You have a quick look. Oh yeah, what's coming up? And they do a brilliant job of, putting in the important items of news, but they don't put everything in, and they don't necessarily, because there's fundamental news being released every hour of the of the day and night, as it were. And this is just a suggestion for you, particularly at the start of the trading session, when you're actually going to do some trading, whether you're an intraday trader or you're going to be looking to hold positions longer term. And that is to go to investing.com. This is not the front page. The calendar appears on the front page. Click on the bit that says economic calendar, and what it'll do, it'll actually expand. But the next thing you have to do is, I suggest you actually move the time to your current time. So as you can see here, it's 7:37 GMT, because David and I are here in the UK. And what it allows you to do is to scroll back in some detail and see what has been happening. And not just the numbers, you have to learn what the numbers signify and how they impact the currency and currency pairs. And it's got this little impact column here. It uses little things, little balls. 3 is obviously high impact. And as we can see here, we had the Aussie had this employment news, much more detailed than you would get on Forex Factory. For example, you have a participation rate, which is something quite, I know they only give it one little ball, but actually that's quite important maybe for longer term, because if the participation rate, in other words, the number of people who you know, the volume of people, if you like, employed. Now, if that goes down, that is really not a very, very good thing. But if it goes up, then it's a very healthy economy. If that was in the 80, you know, 70 or 80, you will be at full employment. It has other stresses. And then again, importantly, you have the Chinese news. So you obviously have local news that's going to impact the Aussie, but the Aussie is also a currency that it also reflects risk on the global stage. And when you also have news, as we have here, out of China, which yes, may be, you know, pertinent to China, but anything that happens in China, it has huge implications on the global economy. That tells you immediately what may or may not be, you know, what is going on, you know, and also may set the scene, may set the tone, if you like, for the, you know, the trading conditions that you could face from the perspective of sentiment. This is without looking at the chart from a technical perspective, which we'll also look at when we look at the charts themselves to be able to recognize the trading conditions, because in the run-up to important items of fundamental news, both that may have a local impact and a global impact, the chart will look very different as to once that news has been released, and it will impact the kind of the optimum trading tactics that you can, you know, that you perhaps should consider when faced with this, you know, this technical picture and the fundamental picture. This is something that we explain in huge detail in our Forex program. I see some of you who are joining us today are actually students of the program and will know exactly what I am talking about. But if I just bring that up very quickly, where is it? Here we have Learn Forex. This is the program I'm referring to. It's called the Complete Forex Trading Program, and the modules here, those are the five modules that are included in the program, the core modules. And as I said, psychology, the fundamental, the technical, the relational analysis. Now, relational analysis is where we bring all the elements together, you know, how markets interact with each other, and how by doing a cross-market analysis, by looking at what's happening in one market in terms of sentiment, will actually tell us how a currency or currency pair is likely to be moving at any given time. And we can see this immediately. We can see the S&P futures here, they're actually down today. So sentiment in terms of risk on, risk off, in other words, is money going to flow into riskier assets for higher return, or are traders and investors a bit more nervous, and you know, they're really not going to, you know, they're not going to chance it today, they're going to seek out more safe havens. That has a direct impact on what you will see on your charts and your indicators. So that's what I want to say on that one. It's just a little tip I suggest that you consider, you know, have a look at. By all means, keep the Forex Factory calendar up. There's absolutely nothing wrong. I really like it because I like the way it's presented. And Forex Factory have actually got two other calendars now. One for I think one for metals and one for softs as well, soft commodities. And certainly for just quick, and it's much more pleasing on the eye, if you like, Forex Factory. But really to have a bit of a deep dive into what has gone before and obviously what's coming up. We've already had some news out of for Europe and Germany, where Germany has actually avoided a technical recession. So that's, if you like, a little bit of background. Moving to the charts, what have we got here? And again, this is, if you like, looking at the, you know, what the pound Aussie has been doing. And just before I go at the actual chart itself, because I've been looking to see whether there is going to be a possibility of a trade in this session. We've had the reaction to the employment data, but also the Aussie will also react to the Chinese data. And what I was going to suggest was you can catch up on the narrative. What I try and do with pairs and markets and analysis is to frame them into, as I said, some kind of narrative. So there, I may not always go back to that particular instrument or market immediately, but if you go onto my site, and here you will find details of my books, where the methodology that David and I use for trading and investing, volume price analysis, is detailed in the books, but it's also explained on the posts that are on there, both on the site, and you can see here this was the post that we that was done on gold and why we thought gold was weak at this particular time. But the Forex one is on it's a dedicated Facebook page, and this is Forex trading. So as you see, you'll find me catching up, and you will find annotated charts, annotated both with the indicators and both explaining the concepts of volume price analysis. So there we are. That was before the news. There, and then then it's got other things, and then it will. There's always a follow-up, as you can see here, and it really just helps to, as I said, to give background, give context to the narrative. Because yes, this is a 24-hour market, 6 days, well, 5.5 days as it were, and it's just so I try and keep it to a theme, if you like. Obviously, with volume price analysis as its base, are fantastic indicators, to support that methodology. And the last thing I was going to say, because I think I'm going to pass over to David, because I need to just have bring my pound Aussie charts together. We were reading about a very experienced trader in the US, and basically the first thing he said, or he always suggests, that new traders have to decide, and that is, or if you find someone that you're looking for someone to teach you this business, as it were, always make sure that you head for someone that will teach you a methodology, and that is what volume price analysis is. It is a methodology. It's a way of looking at the charts. It explains why the price does what it does, why it does it, and more importantly, in our opinion, what VPA will do. It will help you anticipate what it is likely to be doing next. It's the bedrock, and onto that you can then add on, well, we've developed these fantastic indicators, but the most important thing is to decide what is your methodology. And hopefully, I don't know, those of you who come to us and lots of the other traders and investors who bought the books, is they use VPA, and it has really transformed their trading, which is fantastic news. I'm just going to pass over to David. Before I do, just very quickly, my hourly, this is the hourly chart of the pound Aussie. This is the big move that we had at the beginning of the week. It was actually on Brexit news. Of course, the other currency in this pair is obviously the British pound. So that's going to be, you have so you have China, you have what's happening in Australia, and you also have, because it's the pound, what's happening on the pound. So you have a sort of trio of drivers for this particular pair, which is fine. But if you understand that, it will certainly help you. And then you look at the price action. It's been in this very long consolidation phase on the hourly chart, reflected on the daily chart, in the sense that if you look at these two candles, this is the move higher. The trigger for which was the employment data, poorish employment data in Australia, and also the lackluster Chinese data. But if you look at the previous two candles, the previous 2 days, very, very narrow spreads on these candles, sort of a doji candle there, a kind of doji, weakness to the top, but support at the bottom, because you had wicks either side to the candle, and also a lot of volume going in there. So you could say, well, that is anomalous, in the sense that there seems to be a lot of compression of price, but also the willingness of the market not to not to sort of drive this price lower. And you think, well, because the daily chart, the daily candle is a summary of what has been happening clearly of the previous 24 hours. And if you like, you have to sort of investigate, well, that's awfully interesting. There's a lot of volume going in there. That candle is a kind of doji. You know, what is that representing? What does that actually mean on the faster time frame? So if you go down to the hourly chart, I use the hourly chart because I like it. Some people use the 4 hour, but the hourly suits me. And this actually explains it. It's been in this consolidation phase again. So being in this consolidation phase tells us that you know, it could be a tight range, it could be a wide range, it could be a consolidation phase with volatility. This was because we have volatility candles here and here, but it also tells us that you know, it is going to be, as I said, confined. There's a lot of volume going in, but the market can't really decide, you know, a firm break in one direction or the other. It clearly tried there, then it came back and retested so the volume point of control is that area of the chart, it's the balance of the chart, it's where there is a lot of transacted volume, which is what we're seeing on the daily chart, but there is no firm and clear direction. You have attempts to break, and then it will come back and retest, and eventually something will push that away. And if you go back to Wyckoff's second law, the longer this chart stays in this phase of price action, i.e. consolidation, because it's consolidation with a degree of volatility, when the breakout comes, then you can expect that it's going to be fairly explosive. And it was fairly, I think it's about 90 pips actually that came. Now, from a trading perspective, there's two things. If the hourly chart is your chart, is where you like to take your trades, then the decision, the way you can play this, you can say, well, it's moving sideways. There's a number of options. You can say, I really need to wait for a clean break one way or another. You can do that with either limit orders. If this were a stock, you would probably be looking at something like a straddle option, where you say you don't really know where it's going, and so you put you would put an order to the top and the bottom. If you are a trader that trades the faster time frames, that I do on an intraday basis, we have both. David and I have longer, what people like to call swing trades. Swing trades are simply trades that you are going to be in for a longer, more than a day. It could be 2 days, 3 days. We also have trades that have been on for weeks, basically. But it's for intraday trading, knowing that it is in congestion, you could also say you're gonna get some pretty good, two-way price action on the faster charts. And this is where I would use, I've actually got the 5 minute, let's go to the 3 minutes. I normally have the 3 minute. So I have the 3 minute chart. And again, I look at where the volume point of control is, but I'm aware that any moves that I'm going to see in the faster charts are going to be, if you like, contained. Then maybe they're not going to have a huge run because of the condition of the chart on the hourly. This is my benchmark chart, and then I have the 12-minute chart. So I have the 3, the 12, and as I said, and I have the chart which is the hour, which I compare, if you like. I look at, say, well, okay, this is what the hourly is doing. Let me see if there's an opportunity on the faster charts. And then I always use it with a Renko, because a Renko takes away all the noise of the chart, clearly highlights the support and resistance regions. This is the move. This is the move higher that we saw earlier on. It's kind of moving in at a congestion phase. The trend monitor flip-flopping between blue and the intermediate colors and the red. Maybe there was possibly a little opportunity there of a few pips, but really seeing what's happening on the hourly chart. And the key thing about the hourly chart is this resistance here. It cannot get through 88.96. It's had a couple of goes at it. And we're moving into London. What's London going to do? Obviously the pound is going to is now centre stage. The Aussie as well, because it's a sentiment currency. So I have a look at my currency strength indicator. Here we are. And what does that tell me on the hour? Well, I can see the Aussie. This is fairly beaten down. It looked as though it was going to turn up. It's carrying on down. It's kind of moving sideways at the bottom of the hour. Can that go lower? Yes, absolutely. Markets can stay oversold and overbought a lot longer than you and I can stay solvent. The pound is interesting. It's kind of falling, and this is when I would go back to the economic calendar, because I know for the British pound today we have, I believe, we have retail sales. Let's have a look. Let's have a look. Let's have a look. Let's have a look. What's coming up? There's a lot of news on the investing calendar, which is why a lot of traders think, oh, it's just too much information. You know, they stick to Forex Factory, which is great, which is fine. We've got retail. What have we got? We've got retail sales, month-on-month retail sales, and that's a 3. And we've actually got core. You'll find that the data is actually broken down into much more detail if you want to have a look here. So I know that coming up for the pound, of course, I've got the election news, which is also having an effect. But I know, you see here on the comparison with Forex Factory, it just has one number, which is retail sales, high impact. Obviously, in this, in this election period, this is going to perhaps, give the parties something good or something bad. One party will be critical, and the other party will, if it's very good, say, see, the economy's in great shape. So vote for us, and we'll keep it going. Right, can I pass over to you, David, and while I recover from all that, is that okay?
Apologies, I've been hopping around looking at various things. Sorry about that for the long silence. I was just sorting out my charts as well. Just going to flick up my screen. I'll just have a look at that. Let's make sure it's come up. Yeah, that's good. Okay, excuse me.
Oh, good old Solomon. Did you see that? I took a pound Aussie.
Excellent. Well done, Solomon. Good for you. And welcome to everybody from me. Just close the chat box out of the way. Good to have you along. Absolutely miserable day. As David said, Noah's out with his ark. Same here, I'm afraid. Absolutely appalling. I've just been following the euro dollar. In fact, I've got it across. I've got it on another screen. I've got it on Tradestation. I've got the future up as well. So I'll pull that over in a minute. And there's just a nice trend been developing on the faster time frames. This is on 1 minute. I've got the 1 minute, 2 minute, 5 minute strung across the top, and then down at the bottom here I've got the 15, the 60 minute, and over on the right hand side I've got the daily chart, which is just a typical configuration I use for these sessions. This is basically the reaction to the news. In fact, let me just pull this over. So that's on the spot markets. That's on Ninja. I'll just pull this over. This is on. This is the future. This is the 60 up here. So this is the future contract for euro dollar. This is on Tradestation 9.5, which we're working on. We're also working on Tradestation 10. This is being driven for interactive brokers. So this account is linked to our interactive brokers account and providing the data, driving the charts and everything else. But there you've got the futures contract on the left-hand side. I've got the CSI running on 3 minute time frame, and the futures contract I've got on the 2 minute time frame. And it's been a pretty solid move higher. Just got an injection of volume come in there. You can see it here on the futures contract. Euro here is the orange line, it's kicking up, continuing to rally. Probably can't see it here. We've got a volatility trigger on this particular candle on 3 minute time. On 2 minute time frame. So let's just move that out of the way. Just keep a track on that. Move that over there.
Oh, that's because
Germany avoided a technical recession, which was the news this morning. So that's obviously given it some momentum, and it also highlights the whole issue of, again, something we cover in great deal, as Landa mentioned on the program. This whole business of fundamental news is it good news, or is it less worse news than was expected? In other words, if the market's expecting some bad news but actually gets something that's slightly better than bad news, then that's considered positive, and vice versa. That's just the nature of the beast. It's just the way markets react to these releases constantly throughout the day. And this is just an example of it. In terms of in inverted commas, good news for Europe, it's not terrifically good news, but it's marginally better than terribly bad news. So that's why we're seeing a kick up in the euro, particularly reflected on the dollar, which just pull that over again. As you can see here, this is the dollar. We've seen some decent selling in the dollar. Bear in mind, obviously this is intraday, and you're looking at this over a longer term, but that's just on a 3-minute time frame. So for the time being, we're seeing some selling of the dollar. And in fact, if I pull up the, let's just head over to the, just show something else, down onto the currency indices themselves. This is basically what we're seeing. This is the yen at the top left. We've got the dollar top right. We've got euro down here, and we've got pound over to the right. Pound at the moment is flip-flopping around. This is 5-minute time frame. So the pound's moving sideways. This is the dollar selling we're seeing at the moment on 5-minute. We're seeing some yen selling coming in. We've seen some yen buying. Now we're starting to see some yen selling. So perhaps indices are ticking up a little bit. Risk sentiment was reversing perhaps a tad. And we'd like to see that reverse in terms of the selling of the Aussie maybe. In fact, I'm just looking over on the right. You're starting to see the Aussie buying coming in on 3-minute. So that sentiment change is starting to ripple into the markets a little bit, and this is the strong buying of the euro which we're seeing right now. Let's head back onto the charts again. Let's pick up some of the volume. There we go. Nice rally here. Let's pick this up. This is 1 minute. Here we go. We went into congestion. We had a nice little platform of support build here, just above 1.1. Not particularly strong, but strong enough. It's been tested a couple of times and held, and the thicker the line, this is on the accumulation distribution, this is based on price, the thicker the line, then the more then the stronger that region of price-based resistance or support. So whilst it was relatively minor, nevertheless it did its job, been tested a couple of times, held, so provided a modicum of technical support. We then had a volatility trigger. Markets trade a little bit inside that, but we're looking to be pushing higher again on that, which is good news. In terms of that rally, it's just a nice example of VPA in action. As we move away, we've got rising volume and rising price, which is what we always want to see if the trend is going to develop further. Nice injection of volume there into this one. What we're waiting for now. The nice thing with Ninja is that, just open that one up full size. That's an alarm we have going off for one of our dogs at 8 o'clock, so I can tell you it's 8 o'clock now. London's opening, and obviously what we expect to see at this point is an injection of further volume. We certainly had it here, and that's the German release. Massive injection of volume. Whether London will top that, we will see shortly. But what we're looking for now is the usual price behavior that comes along at every crossover, particularly on the London session. And when I say usual price behavior, what we expect to see are reversals, traps, all sorts of things going on. In other words, the continuation of price action which we've seen is unlikely to just follow through at a steady pace. It very, very rarely happens like that because there's one simple reason. It is an ideal opportunity for the market makers to step in, new session, 1.5 tons of volume coming into the market, and they have the opportunity to reverse and trap and trick and everything else that goes on at session crossovers. There's no news around, it's just the fact that a new market is opening up, and therefore it's another opportunity in this 24-hour cycle, and they are not going to let an opportunity pass, I can assure you. So what you're constantly looking for around these phases of price action is either congestion, reversal, sudden moves higher, volatility, trap up, trap down, all sorts of things going on. It's not a simple continuation of what has gone before. And you'll invariably see it at the crossover between London and the US session, where you will see complete reversals in sentiment, where perhaps, for example, the pound has been bought very strongly, it'll suddenly be sold very strongly, or the dollar's been sold in the London session, suddenly it becomes bought very strongly as the US market goes on away. It's just the nature of the beast. Trend monitor, you can see there, is helping to keep us in. We've had a pause, had a big surge in volume. This is 8 o'clock. Nice thing with Ninja is it gives you this correct time stamp of the local time. So this is 8 o'clock our time. This is now 8:01. This is now 8:02. We had some decent buying under this candle. You can see it here. We had a down candle, narrow spread, good volume under that candle. What is that telling you? That's telling you there's buying in there, purely because if that were heavy selling, which is what you expect to see, if you compare it to this candle over here, for example, it's a little bit higher, the volume. This is a little bit lower, but nevertheless, if you use that as a benchmark and said, well, that's my benchmark candle, you would expect this to be wider in spread, and it isn't, and therefore the corollary to that, the conclusion is there is a decent amount of buying coming in under that candle. That said, I'm just waiting to see what happens in terms of the next one. That's got a little bit of weakness to it. We've got a wick there. There we go. You can see it more clearly now because it's come off the axis. Wick to the upper body. We've got some decent volume under that. So we've got some selling under this candle now. We haven't got a clean follow through. And I'm looking over on the CSI. I'll pull that over. Actually, it's easier. There we go. This is the CSI. This is, you can see the volume profiles picking up. This is on the futures contract, remember. Over here we've got the euro, which is up in overbought. We've got the dollar here down in oversold. So if I'm looking at this as an opportunity, if I'm considering this as a reversal trade, which is what I always look for. This was the Aussie I mentioned earlier. This is the buying we're seeing in the Aussie, the blue line. So there's a shift in sentiment there. And this is the selling in the yen. So if you're looking at the Aussie yen right now, there will be a decent trend. It will be pretty quick because we're on 3 minute up here. So what you're looking at now is the opportunity for a reversal trade. If that is your preferred tactic, I'm looking at euro overbought. I'm looking at dollar oversold, perhaps yen oversold, perhaps Canadian, the purple line also oversold. But if we're looking at euro dollar, that's the one that I will be looking at for a potential reversal opportunity on a very quick time frame. If I drop this down to a different time frame, maybe take this down to 1, just see how it's shaping up there. Because whether you're using multiple time frame charts or whether you're using multiple times on indicators, the principle is exactly the same. You use multiple time frames in the same way. It gives you that heads up as to what is going on in terms of the very fastest time frame coming up at you into the slowest time frame, or the slowest time frame that you are trading. What's interesting on the 15 minute here, and bear in mind that when we're comparing volume, we've always got to compare like with like. So in terms of this rally here, this is from 7 o'clock to 8 o'clock on 15 minutes. So we've got effectively 4 candles in here. We're looking at falling volume. No great surprise. We had the massive surge in volume on the news. Now the volume is falling away. So we've got a rising market and falling volume. 1.5 tons of volume here on the volume point of control. And that works in exactly the same way as support and resistance from a price-based perspective. In other words, when you're running into high volume regions or low volume regions, then if we're in a high volume region, or we're moving into a high volume region, then that is going to act as resistance to the advance of price, purely because it's going to create congestion. If you've got a low volume node, then the market is likely to move through there pretty rapidly because there's very little in the way of old orders, new orders sitting there, trap traders, whatever it may be. In other words, there is low volume there. So you can look at volume in exactly the same way as you do as price-based support and resistance. So using the high volume, low volume nodes in that way, it's exactly the same principles. Just have a tick up to the 5 minute. Just keeping an eye on what's going on. The trend monitor you can see has transitioned. We went through from this bearish phase, tried to transition out of it, went back into it, tried to transition out of it again, no, still bearish. Then we get the transition through into bright blue, which is holding us in. If we're holding this particular position, the trend line is rising, it's flattening off a little bit. There's a little bit of weakness coming in. We've got high volume under this candle now. Indecision, so no great follow through there. We've got wicks to the top and bottom, so we've got a doji candle. It's not indicative of a reversal, it's just indicative of some indecision, a little bit of weakness. We've had this strong rally, and now the market is moving into a less strong trend in terms of a momentum higher. It's still trying to rally. It's a question of how much further this move will take us. And to put all that into context in terms of the daily chart, which I've got down at the bottom right here, let's click those off, sorry about that. This is basically the trend, and it highlights the issue that all traders have to face, which is whatever you're doing in your time frame, someone else will be doing the complete opposite in another. There will be traders who are short euro dollar right now on this particular time frame, and probably slightly faster ones as well, maybe the hour, maybe the 4 hour. They will be quite happily short this. They will have seen the news come in. It's not going to bother them particularly. Their view is that selling the euro is the right thing to do against the dollar for whatever reason, whether that's a technical or fundamental perspective, or both, or related, whatever it may be, doesn't matter. They'll be looking at this chart quite happily. The trend is still bearish for euro on this particular pair, euro dollar. And all they'll be looking at it from a technical perspective, maybe if they have the trading indicators, they'll be looking at this and think, okay, well, we've got some decent support here below. This has been tested 5 times, this region, this blue line, which is why it's much thicker. These other two are minor. They've only been tested once. This has been tested 5 times, so it's pretty strong. It came into play yesterday. It's come into play again this morning. Just pull that out a little bit so you can see it better. There we go. It's come into play again this morning. And if you're holding this position for a deeper move south, then from a technical perspective, at any rate, this level is now key. If the market breaks below that, then what have we got below? Well, as I said before, you then start to look at the volume histogram, this region here. This is the volume point of control, which we're breaking away from. This is the heaviest concentration of volume on the chart. And as the volume falls away, then if the market breaks below this region, you would expect it to move pretty rapidly, because there is nothing in the way of, certainly from a price-based perspective, in any way to hold it up. And as the volume falls away, that makes the journey for the pair easier, because there's very light volume in the way to cause any support either. So if it breaks below this technical price-based perspective, then as we move further down the chart and as we get to these regions here, we've got low volume, then the market is likely to collapse further. And it's another nice example of a double top in place. We had a top build here, we had another top build here, we had a resistance here which came into play, decent resistance there as well, technical resistance, and the market then rolls over, and supported with good selling volume as well. And when you get these sorts of candles, when you see these wicks to the upper body and you've got good volume underneath, yes, there's a wick to the lower body here, but you're constantly looking at these, opportunities, wick to the upper body, good volume under that particular candle. Another one here, it's when you get these rallies in a market that's moving lower, those are the candles you're looking for under high volume, because they're just signaling to you further weakness to come. It's just an effort to rally, lots of selling within that candle, and the market's going to dive down lower. Okay, we're in congestion at the moment on this particular pair. Just checking over there, see what's going on. Okay, let's have a quick look at the various CSIs and all the other bits and bobs. There we go. There we are. Right, this is the CSI on 5 minute. This is the buying in the euro, now very overbought. This is the dollar, very oversold. So we would certainly be looking at that as an opportunity for reversal. It's still got a little way to go on 10 minute. Doesn't necessarily mean that the euro is going to get up into this region. There's no rule set that says it has to. It could touch it, it could fall short of it and roll over. The yen here, for example, it did climb into a little bit and then started to roll over, and we've seen yen selling coming in ever since. And the dollar is not yet into overbought, but it doesn't necessarily mean it has to get there. Up onto 15, that's still continuing. Strongly rising euro, strongly falling dollar, so we've got that's the trend that's developing. But we're looking at the fast time frames down onto, we'd be down on 1, 2, 3, 4, and 5 to see that reversal, because again, coming back to what I said earlier, someone may be holding this, a trader might be holding this on a 15-minute and looking at this and thinking, yep, quite happy with that, got more travel in it, got more opportunity to go. Whilst a scalping trader, an out-and-out scalping trader who may be trading multiple times, maybe hundreds of times in a day, they will be shorting this right now, picking up some pips, whilst the slower time frame trader, in inverted commas, on 10, 15, 20 minute, whatever it may be, will simply be viewing that as a pause reversal in a longer term trend higher. And that's what you have to tease out the whole time. It's deciding for yourself what it is you're going to do, how you're going to do it, how long am I going to stay in this trade? Am I in this trade for seconds? Am I in this trade for minutes? Or am I holding this trade for hours or days? As Anna said, we hold trades across the market from literally, we're on the 15-second, right the way through out to the dailies, weeklies. We've had trades running for months. We have trades running for weeks. We trade intraday. We have different accounts to do different things in, because otherwise you'll get muddled up. So if you're going to take that approach, we are very privileged. We can sit in front of a screen all day. That may not apply to you if you have a job. We recommend you keep the job until you're 100% confident that you can make a living doing this business. Otherwise, just trade slower time frame. It's one of the questions we get all the time. It's one of the beauties of volume price analysis. It can apply to whatever time frame you care to choose, whether you're a 15-second trader or whether you're a monthly trader. It makes absolutely no difference. The methodology is identical, the principles are identical, the indicators work exactly the same way. It makes no difference whatsoever. Just go up into the currency matrix. This is on 5 minutes. That's the Aussie dollar. I've had a kick up, starting to flatten off a bit. Let's just have a quick look at the euro, just isolate that out. The euro yen is actually stronger than the euro dollar, so the trend there is a little bit stronger, but essentially you can see the market is broadly buying the euro, but not universally. We've got the euro Swiss down here. I was looking at the Aussie Swiss earlier on, which had some heavy selling on it. It had a very nice trade lower. But in terms of universally what's going on, it's not pure. As I say, there is some divergence here. You know, there's a little bit of euro selling here against the Swiss franc. Euro or Aussie is not that strong either, and you can start to see if these start to separate on this 5-minute time frame, then that is telling you that this trend is weakening, that the buying of the euro is not as strong as it was. These numbers will decline, and as you can see here, literally as I'm talking, the euro Swiss is down here. It's starting to fall away, and if these others start to fall away, then clearly that is indicative of a shift in sentiment for the euro universally across the complex. See where we are on 10, and that is starting to, it's shaping up on 10 as well. These are starting to come off the top. The euro Swiss here, you can see, is falling quite a lot. So again, if you're looking at that for euro universal sentiment, it's not uniform at the moment. It's pretty weak. So whatever you're trading in terms of euro, you've got to be aware of it, because what you're looking for constantly as a Forex trader is, if I'm trading a currency, I want to be trading with the bulk of the market. If the market is universally buying euro, and that's what the currency matrix delivers pictorially for you, if the market is universally buying or selling a currency, you want to be trading in the same direction. On occasion, you will be trading against that flow, but you've got to appreciate the fact that you are. It's a much higher risk proposition, because if 6 of the 7 pairs are going in one direction and you're trading in the other direction, it's massively more risky. It has to be purely because and there may be a reason for it. It may be local politics. It's driving that particular currency in one direction, and yet the market is moving in the opposite direction universally on the other pairs, which is fine, but as long as you appreciate that, and that's one of the aspects of the currency matrix. Just head up onto 15. Let's see what's going on in terms of dollar. Okay, let's just isolate out the euro again. And again, it's a two-stage process. You're constantly looking at euro, dollar, euro, dollar. If you're trading euro, dollar, you're looking at isolating out the two pairs all the time. Let's go back onto 5 minutes. Okay, we're still seeing that buying of euro continuing. Let's go back onto the charts. The dollar is starting to kick up. If the dollar starts to reverse and move higher, then what we like to see is two currencies moving together, in which case a possible congestion phase building. But for the time being, this move is picking up strength again. Just keeping an eye on the futures as well, to see what's going on there. That's replicating it. I'll just put it across for you. There we go. That's what's going on in terms of euro on the futures contract. Nice volume. Trend monitor working exactly the same way, moving up into a low volume node there. Volatility trigger, but we followed through on that one. We had volatility on 2, but nothing on the 5 minute or the 15 minute. So that is limited to the very fast time frames. And it looks as though we're going to follow through from that particular candle. Trend monitor is helping to keep us in still. And you'll see even in this little pause congestion phase here, where the market sort of reversed, what's nice about it when we're looking at it from a volume perspective, the volume here on the selling was falling away. It increased on this one, but then we get the reversal, decent volume under this one. And I've got the volume switched off on live purely because I've got so much data coming in. But it's still developing nicely. The trend monitor is helping to keep us in. You can see we had a little bit of a transition here on the 1 minute. I normally have this running at 15 seconds, but I've come off that down to the 1 minute. The congestion phase here, the trend monitor was trying to keep us in. Then it went into a darker color, signaling to us that potentially this was coming to an end. Then we went into the darker red, and it's really starting to signal at that point, well, do you know what? This potentially is coming into a bearish sentiment change. But then it never goes through into bright red. The trend line just dips below the fulcrum. It started to kick back up again. We've gone back into a darker blue again because the trend monitor is now looking at it, considering it, and thinking, do you know what? This is not actually going to reverse. And we're now starting to pick up momentum again. The trend line is rising nicely. The trend monitor has gone back into bright blue. Good volume under that last candle. That's on 2 minute. So we've got some nicely rising volume here. We want to see what happens to the next one. We're moving into a low volume node or a low volume region of the volume histogram. We're moving well away from the VPOC, which is down here. So we've had this very strong rally, nice move away, all developing nicely. Just looking over and see what's going on in the futures. That's fine, nice volume under there as well. Down onto the 15 minute, we had the little doji candle here, indecision. Got a very nice platform of technical support here, which we broke through with this particular candle. Very strong level there. And we're now moving up into a low volume node in terms of the 15 minutes as well. So another reason that we're looking for this to continue for the time being. Yeah, I'm just going to move over to Anna for a change in voice. I'll keep an eye on this and see where we're going.
We're just back on the pound Aussie again, and as we can see, first of all, haven't actually been able to get over the high. It was today's high actually. It's 89.96. It's really very much gone into its shell. We know that because this is the congestion that we've got on the Renko. This is actually a fixed value. I've got it on 3 at the moment. I can put it on the OTR. That's when the indicator picks up the optimum pit value for these Renko bricks. We can see the pivots have been fired here and here. So the congestion range, if you like, has been set out for us. It was from here to here. It was quite wide. Now it's kind of that's narrowing at that point down. That's there. So you know we're in a congestion. We're in a consolidation. What's interesting is on the 3 minute, we have these two candles here where you had a lot of volume driving in there, but you had wick to the top. There. It just, you know, attempt to break away, if you like, you know, no, didn't go any further because of the, you know, if that was going to go further, based on that volume, that candle should have been, it wouldn't have had a wick to the top, would have been higher. Then we had this kind of, you know, this minor reversal. Again, price support came in back into at the volume point of control, and this is where it's rotating. A lot of volume going into this pair. But what's interesting on the 12 minute, and this is what I wanted to highlight to you, while the congestion is building on the faster time frames, you can see the VPOC is still down at here, which is where we had the initial break on the news overnight, and that provided the platform for this move higher. It retreated to within the spread of the candle, which is what we expect, and then we had another, you know, potential lift off, but we've hit this resistance, as I said, at 88.96. Now this is building. This is kind of generally moving sideways. Another way to look at the volume point of control is if this congestion continues and this histogram continues to build at the back here, as you can see here, this is the histogram behind the volume point of control. It tells us the depth, if you like, of the strength of the congestion. This is because the VPOC you can also see as support and resistance through with volume added through the prism of volume. Now, if this is going to move, you know, if there's a chance that this is going to move higher, you want to see this move up to here. This is dynamic. As soon as this area, as soon as there's more transacted volume at this price range than there is here, then this will move higher. If this breaks, if this fails, if you like, and moves lower, which is possible depending on what happens in the session ahead, and we'll have a look at the CSI as well, and it comes down to the support line at 88.59. What we see here, we have what is called a low volume node. So what this also tells me is that if it does, reverse and come down here and look to break lower, once it hits this area here, it's going to go through pretty fast, because there isn't a depth of cushion of volume to keep that price supported, as it were. Whereas when it starts to hit these areas where you have a lot of transacted volume in terms of support and resistance, then you will find it will be supported, and any move through high volume nodes take more effort, and they're slower. Whereas when they hit a low volume node, they will move through much faster. Let's have a look, see what's happening. It's going to have, I think it's going to have another run to the upside. Yep, we've got that here. And again, the Renko, in terms of potential entries and exit. Well, first of all, you have to look at the support and resistance. Where is it? Are you going to wait until it breaks through? Look at what the indicators are telling you. Look at what the trend monitor is doing as well, and also keep an eye on what is the news. And we know for the pound, we have this news for the retail sales, which are an hour away. What happens with retail sales, with fundamental news items and releases, is sometimes you can get some really nice price action about now, about say an hour before, well, people positioning, maybe closing out. So there could be an opportunity to take a trade. Then you have to make a decision whether, if you are in a position, do you want to hold through that item of news? And it depends. That depends on you. Is the item of news, is it really going to be market moving? And you think, well, if you've got profit, maybe you've got multiple contracts, you can take some off and maybe just leave one or two and say, well, whatever happens, happens. But then it also depends on your time horizon. Are you, as David has mentioned in the chat, are you a scalper? You're not interested in staying in for for hours, as it were, or even sort of 10, 20, 30 minutes. You're literally just going to go in and do as many trades as possible. So there are a lot of factors to the answer to whether should I stay or should I close out. Well, it all depends, and that all depends. There's a whole list of ifs and buts, and you have to that's only a decision that you can make. And there, as I said, there is no wrong or right answer to that. Looking at the CSI, again, they're not really doing very much. This is the pound and the Aussie. They're kind of, it's kind of meandering a bit. That can't decide whether it's going to turn back lower or actually going to reverse. Don't forget, the Aussie is very much a sentiment currency. So if the futures suddenly start to go up, then you'll find the Aussie will be bought anyway, and it'll be a whole new picture for the currency. Looking at the trend monitor, it's all, the pound's a bit all over the place at the moment. It's kind of in the middle here of the matrix, so it's been sold off against the euro pound here, not surprising, because it's been very much a buy of the euro. The matrix kind of ranks the pairs, but is also a great way to see if they're in the middle. Again, it's reflecting this congestion, this no strong divergence. And what I said right at the beginning, what kind of tactics, we talk about reversal trading, we talk about breakaway trading. Do you become a specialist in one type of tactic, if you like? So you're always looking for reversals. What are the criteria for a reversal? You just want to do. That's up to you. Or do you look at a chart and you say, do you know what, it's really not a reversal. There is no reversal opportunity if my criteria for reversal is I'm looking for the bottom of a trend, the top of a trend, and I'm looking for a strong move, as I said, on a reversal. Whereas this is much more a congestion phase. Is there an opportunity to take something on the very fastest time frames, maybe looking for a breakaway? It really all depends. You have to kind of try all these things and find out which do you prefer, which suits you. They all come with different levels of risk, if you like, as David reminds us all the time. With reversal trading, when you're looking at the extremes and you're waiting for the rollover, it's going to come, but it's not. If we look at the CSI again for the Aussie, here we are, this is on the hour, but it could be any time frame, right? We know when things become overextended, as this is here, we know at some point that is going to move higher, but it's not necessarily going to move higher. If it had an attempt to rise, it could drop down again and then take off in a nice sort of a nice move higher on a trend. That has implications of your money management and your stop. You may have to consider the possibility that the stop has to be placed that much wider to allow for the for this possibility that it will, before it moves in one direction, it will go in the opposite to you. Volatility also comes into play. If you have a lot of volatile candles being triggered on the chart that you're looking at, your stop loss has to be wider. In whipsaw price action, going back to recognizing what are you looking at in terms of the market condition, the chart condition that you are facing. First of all, you've got to recognize it and then say, it's no different. We always use this analogy. You've got a boat, you want to set sail out on a lake or out into sea. Well, what do you check first? You check the weather, because the weather is going to determine, well, are you really going to set out and it's blowing a force 8 gale? Well, you might want to, but you're going to have to take some very particular measures to be able to cope with the conditions that are out there. Or is it a very calm, serene day, not a lot of wind? That's on the surface, that sounds great, but actually it's going to be a bit of an effort to get from one side of to get from A to B, which is why we talk about the doldrums. And markets are exactly the same. So you've got to recognize it. Are your tactics, are the way you like to trade, are they suitable to what you recognize, what you see on the chart? And if not, do you wait, or do you develop multiple, you say, well, actually the chart is saying this to me, I'll wait. At the moment the pound Aussie is pretty much a wait and see, but we know why there's a wait and see, because the technical picture is only part of the equation. You've got the fundamental element, and in the way we see markets, you've actually got a third dimension. You've got what we call the related markets, in terms of what is happening to do with sentiment. And in fact, I think we've forgotten the fourth dimension these days, which is politics. And of course, you've got the fifth dimension, which is Donald Trump, which he seems to be a driver on his own, isn't he, David? I mean, a very, very strange speech from him the other day. It was all over the place, and I think markets are just kind of throwing their hands up in horror, and what's going on with the US and China. But who knows? It's just part and parcel of the uncertainty that we have to face as traders. I'll pass back to you, David. Is that okay? Have you got the just very quickly before I pass back to David, we've had a quick look at the Forex program. Here it is at Quantum Trading Education. All the details of the structure of the program and also the cost of the program is there. The program does include the full set of the quantum tools, that some of which we've been using. They're all on the charts, but we don't talk about all the tools on the charts. It's just the one or two that we to help describe the price action. And in fact, there's such a comprehensive range of tools. What we'll be doing in future sessions is saying, well, okay, I want to do a reversal. What are the which of these tools is the best ones to look at for a potential reversal? We've looked at congestion phases, obviously the volume point of control, hugely important. It has elements of market profile in there as well. If you want more information on them, it's at quantumtrading.com, as we can see here. Ninja there from MetaTrader 4.5, NinjaTrader, and TradingView, and it's but we also have developed them for Tradestation as well. You can buy them individually. There are bundles there. If if you, once you've gone through the site and you think, oh, I can't see the combination that I like, just drop us an email. You can drop Dave an email at david@quantumtrading.com, because if there isn't a little deal that you like, maybe you don't want the full package, but you've seen one or two that you would like to bundle yourself, we will always quote you a special price. And by the way, if you are part of a trading group, where you, as I said, just on the internet, and maybe you want to introduce the tools to your fellow traders, do drop us a line, because we're always happy to collaborate with groups. We always like to give them a help with special pricing, what have you. Also, 7-day money back guarantee on everything, whether it's one bundles or the full package, and it's all upgrades are free, whether to the platform or the tools themselves. But there it is, it's at quantumtrading.com, or you can drop me a line, anna@cooling.com. Right, that's that done. Just move back down to here. Oh dear, so it is very, very laboured at the moment, so we'll wait and see. You can catch up with what's happening with the pound Aussie. As I said, I'll be putting it up on Facebook, and of course the recording of the webinar will be going up as well. Can I pass back to you, David? Is that okay? Fine. So have you seen the comments or something, Solomon? I'd like to know how to manage the changing and how to trade a quick example movement. You just have to be aware of them, Solomon. You know that they are coming up. I mean, part of being a trader is anticipation. It's anticipating, how you manage the trade, the changes in sentiment. It also depends on the time frame, or on the chart that you're trading. If you're on a faster chart, then this is the decision you have to make. If you take a trade that is, in one set, particularly with Asia, and it's coming out of Asia and you're coming into Europe and London, now sometimes that sentiment carries through and sometimes it doesn't. But as David also mentioned earlier, if you let it settle down, if you haven't got a position, you just let it settle down. I think 5-10 minutes, and just see where where the price is going to go. But again, it really depends on your on the time, on the chart, the time frame that you trade. If you're on the very fast charts, you have one set of priorities. But if you're holding positions, you've taken on the daily chart, or you're taking on the 4-hour and the daily, or even the weekly chart, well, the decision, the recession crossovers are going to have an impact. Of course they are. But they're not necessarily going to affect what is going to happen, what is happening on the longer, on the slower time frames. What you'll be focusing on there will maybe it's just going to be longer term. I can't think of any way of saying it. Can you, David? You want to add to that? I'm just going to pass over to David. I'm going to say goodbye. We are back this afternoon. And well, assuming my daughter doesn't ring us and we have to rush off to the hospital, but we should be better this afternoon. Nothing's happened so far. Back at 3:15 UK time, we'll be looking at the indices and the commodities. So if you come along, I know some of you come along to that. Otherwise, as I said, all being well, we will be back next week. I'm just going to pass over to David and he can wrap up as well. It's okay, hon. You finish off what you're saying. Oh, sorry. I turned it off.
There we go. Brilliant. Okay, just back on this, just wrapping up very quickly. Nice to see this little reversal is now taking place. I've actually stepped this down on 15-second, which is actually one of my favorite time frames. It's very quick, not for everybody. You can see the selling's coming in here. We've had the transition through into bearish, got a little bit of hesitation here. We've got all sorts of levels down here coming into play. Good volume under that last candle. So that's on 15 seconds, starting to break down. You can start to see that, and it's the power of using multiple time frames. You can start to see that ripple effect now. We've got it in several different ways. You've got the trend line, which is now diving. We've gone below the midpoint here. We've got a transition in color here, so we've gone in, and it looks as though we're going to maybe get a complete reversal into bright red out the other side, but so far we've gone dark blue, dark red, just as this move gets underway. We've got a nice 2-bar candle up here. This is something I'm always looking for, 2-bar reversals. You overlay one on the other and you've got an upthrust candle there. Very, very simple. And down onto 15-minute really just confirms the weakness we're seeing now. Ton of volume under this candle. Deep wick to the upper body. Here we go. Hold on one moment. It's okay, apologies. Deep wick under this candle, big up thrust, lots of volume underneath it. What's that telling you? Well, you know, it's pretty weak. Got some support coming into play here. Gradually, if this develops into a full-blown reversal from what could be considered here as the primary trend, if we're going to go into a primary trend lower, then obviously this will transition the trend monitor, but you wouldn't expect to see it on 15 at the moment, but you're certainly starting to see it ripple through. It'll come through into 2, which it is. No change on 5 at the moment, but if it changes dramatically, it will do there. And just over onto, I've got this is on the futures. I've got the trend monitor here set to a much slower, a much less sensitive. So this is changing much more frequently, hence the reason we've gone into red here on that particular time frame. You can see on the CSI here the selling of the euro that's come in on 2 minute. We got up into overbought. Now we're starting to see that selling take shape. The dollar is not really reacting very positively. And what's happening here is that it's not rising so strongly. So we've now got almost these two traveling together. In other words, a train track situation where you've got two currencies moving in the same direction. So the trend is not going to be strong for the time being. It will only develop into a strong trend if this continues on lower and this one kicks up higher. If these two carry on in the same direction, then all you'll get over here is congestion phase building. It's as simple as that. So there we go. I'll leave you with those thoughts. Really appreciate you coming along today. Hope you've enjoyed it. Hope you found it useful. And we do appreciate the time you spend with us. So thank you once again to all of you. As Anna said, if you have any questions, please just drop us a line. Happy to help you there. Either help desk at Quantum Trading, guys there will help you, or Anna at Anna Cooling, or David at quantumtrading.com. Any of those will find us. Thanks once again. We will see you this afternoon, and bye for now.